better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some land again.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, I have a special guest. We have Jenevieve.
Hello.
From Zinger Finance. So thanks for coming on today. And,
thanks for having me.
Having some time to talk to everyone. What do you do in the business, Jen?
So I work for Zinger Finance and I'm a mortgage broker.
Mortgage broker. There we go. I always think, you know, when it comes to building a portfolio, everyone's like, oh, Birchy, how do you get those cheap properties that you buy and all these things? But without the finance, you don't have a deal, right? The deal can be as good as it can be, but without the money, you can't buy it. And the finance, people don't give finance enough credit. It's not just 100% buying a good property, it's having the finance to buy the property. That's the other 50% of it. So it works hand in hand. So cool. And so you're a broker, you see lots of interesting things.
Yeah, we do. There's a lot of different cases. You have a lot of different clients, a lot of different scenarios, especially with people's financial situation. Nothing's one-to-one. It's always case to case. You see a lot going on with people.
Yeah, cool. And this is your first job inside of like finance space, because we do things very different than other brokerage firms out there, because like most brokers just think, oh, we'll get you the cheapest interest rate, or those sort of things. So just look at very vanilla type of stuff. But one thing I realised from talking to everybody in the team, like you guys just think that building portfolios is just normal, right?
Yeah, we do actually.
It's just like, we've got to get 10 properties for this guy, we've got to get 10 properties for this chick, like we need to do that, where most brokers wouldn't think that you could even do that. So your level of knowledge is like far greater, because it's, But what are some of the sizes of the big portfolios that you have, like some of your clients, like just randomly that you see in the office?
Some clients, we can go from clients that can have one property to clients that have 10 to 15.
Yeah.
And it's amazing to see in the last financial year, we've seen a client that when I joined the company, he had nothing, and now he has about 10, 11 properties.
There we go.
And it's really good to see, because they didn't even think that in this year that they'd get to that level.
Yeah.
So it's really good.
And you see that whole journey, that's cool.
Yeah,
cool.
You see from start to finish, with nothing to 10 properties. It's amazing.
No, that's cool. That's what we do here. That's what we do. So, just some questions for you, Jen. I've got a few little questions here that I asked through. What would be some of the things that you've learned? Like, you're relatively young. We have everyone in all different age groups of the business and the team and that. Like, and the people that watch us, like some people I ran into a dude the other day, he's like 19, and he's like, I've been watching it since I was in school. And I was like, yeah, he's been watching for since 16 or something. So lots of people young and older and all that sort of stuff. You being younger, like what are some of the things that you've learned that have influenced some of the things that you do today and how you view?
I think one of the things would be keeping an open mind and joining things. So I think coming into this job, even, I was coming in with an open mind and learning a lot of things.
The boss has a rat's tail.
Yeah, I think that affected a lot of the decisions I made in life. So I'd say having that was something I learned, and being open-minded, because coming to finance, meeting clients, learning all these things, you have to have an open mind, especially with our investors. They do a lot and you learn a lot too. Yeah. So that's one of the few things I've learned.
Yeah, and I see that as a team, you've got quite a large team for a brokerage firm, and you know that when you go to the industry days and the development days and that, you see these other brokerage firms, they've got one or two people in their team. You got dozen plus, and when you have a troubleshooting, you got so much knowledge in that team that you can collaborate and be like, hey, I've got a situation here, and there's lots of people in the team that can be like, oh, what you should do is look at it from this way instead of that way. And
definitely, we work a lot together, so I think that everyone in our team is knowledgeable in different areas, and when you need to work on something, we can work on it all together. So it's really good. We have a team, big team, and we all have our input, so it's really good.
That's good. You get great results. So it's I see it single-handedly working with our investors that it's if they don't have the finance, they can't do what they do, and that's the other part of it, and that's why we got you out here today. I guess another question, just a random question: if you could trade financial lives with one person, anybody in the world, could be anybody, who would it be and why?
Elon Musk.
You said it.
Zuckerberg.
Wow, you like those guys, eh?
I really like them. I think to be, like, financially speaking, to be in their position, imagine just tweeting something and having the ability to change, you know, crypto,
sure.
which is quite weird.
Yeah.
But it's interesting in that sense. I think I'm more intrigued about what goes on in that area.
Yeah. I think what they have to do to get to where they've been and the deals pretty much, right? You said it, not me, right? You said it, not me, but it's an OBS Birchy podcast, so you can say whatever you want.
Yeah.
The intro was motherfucking reality. So it's interesting. I think a lot of people see these people, and I think from the average, like all of us that just look at the world, that these guys are like the top financial, but I actually think when you look deeper as well, there's like deeper levels of people that control them, right? Yeah, I want to know who their puppet master is, right? Who's the one with the strings? So,
definitely. I think, especially from a finance perspective, because we see everyone, you know, financially, we have to see everything. I always think about if they were our clients, like what would their portfolio look like? What do they have going on in their life? Because you get to know your client on a personal, intimate level. So imagine having people of that level as a client. It would be so interesting to see.
Well, we've got some interesting clients that we look after as well. They're from all different walks of life, and we've got sports stars, and we've got like some celebrities and stuff like that as well, which is cool. So, yeah. Cool. And so I guess on the topic of that, like, what do the banks look for, when you're getting a loan, and what sort of things can people sort of do in their own life to improve their position, to look more attractive to the bank, to be able to get the loans, to get the large property portfolios, 10, 15, 20?
So I guess a lot of things that the bank look at is your income. So, you know, if you work a job, if you work part-time, full-time, casual, if you're self-employed, if you're PAYG, they look at that. They also look at your liabilities, your debts and liabilities. So I guess things like credit cards, where you have a huge credit card that you don't really use, you know, you should close it. I'd say, just because why do you have 40,000 on a credit card, and what are you going to do with it if it's just sitting there?
How, like, if someone had a $40,000 credit card with no debt on, let's say it's just, you know, they can use $40K, how much roughly, like every bank's different with the servicing of that, how much difference would 40 grand affect someone, or could affect someone? Is there a calculation?
I wouldn't say it's an exact calculation, but I guess it would be more so the repayments you make a month. Right? It affects your monthly servicing, because they take those repayments into account. Just like how you have your mortgages and you have those monthly repayments, the same would apply for a credit card, you know? So
if someone had a 40 grand credit card, 20% interest rate on the credit card, that'd be like 8 grand a year. It's like $160 a week. That would be like a 200 grand mortgage at 5% or something.
It's a lot, because some clients, they say, we have this credit card, we're not using it, there's an outstanding balance, so it should be okay. It still sits there, still a liability, so it's still taken into account, because in the case, you know, we do submit the loan, you might use the credit card, something might happen where you have to use it, so they'll take that liability regardless. So
I think a lot of people don't look at these things like that. Hex debts.
Hex. You know, some people have 80K, some people have 10K.
Car loans.
Personal loans as well. So some people will take out a personal loan to pay out a car loan, but it's still a loan. It's still a liability. Those things.
And then what about, like, if, you know, payday's Thursday and we go down to the pub, have a few drinks, get some cash out, have a slap in the pokies, is that okay? Or
No. So if you're frequenting, you know, going to the tab TV, and that does appear in your bank statements a lot, the bank will pick up on that, you know. I think things like that, they'll kind of put a flag on it, just because it's okay to spend money, but with gambling, they do take a risk. You know, if they're giving you a loan,
they don't know what else you're doing.
You're known for slapping in. You want to release equity, for example. Oh, what is he doing with that money? You know, is it going to an investment property? Is it sitting there? It's going to the tab.
And what about if I was, like, you know, doing Netflix and chill, and then I call up and get my Uber Eats, right? How does Netflix, how does Uber Eats, how does all those things affect?
The bank would look at that in HEM. So you have your monthly expenses that would kind of go into entertainment, food. Those things are okay, really. You know, everyone eats, everyone has Uber, everyone has Netflix. I think your subscriptions, you know, always happen, but it would fall under HEM. So that's something the bank does look at as well. So you have your monthly expenses. Things you wouldn't take into that would be like private health insurance. Some lenders don't take child support and childcare, things like that, or private school.
So that's it's interesting because like there's lots of rebates for children and different things like that. Like each bank's different.
Yes.
Yeah. So it's important to work out, okay, if you've got an issue, one bank may say no, but the next bank, given your specific financials, might go, yeah, we'll take that.
Yes, that's the good thing about being a broker is we have a lot of lenders, we have a lot of options. So for one bank, you might not match it there, but for another bank, you might actually be able to get a loan there.
Yeah.
So there's the good things.
Yeah, awesome. And I know like that there's some banks that will, like most banks will want to, if you've got a property under a trust, like if someone's buying under a trust or under a personal name, some banks will want to put that property, will take that as your own debt, and then some won't take it as a debt.
Yeah,
is that right?
So I think ANZ is an example at the moment. Policies are subject to change,
Yeah, they change all the time.
But you can put a letter for trust,
Okay.
accountant's letter in turn
Okay.
for that, so that they won't take it, which is good.
Yeah.
People take note if you have trust. But things like that, every lender is different. So sometimes a client might have a lot of property under their trust and not in their personal name, but that still might affect servicing. So we have to look at which lenders won't take the trust debts and liabilities.
And then also the add backs for like any sort of tax concessions, so you trap them inside the trust and it can hurt you from servicing. So cool. And I guess like we're in a world now, the last 12 months we've seen like 10 or 11, whatever it is, interest rate rises. People are sort of saying, well, I wish I could refinance from my current lender to another lender. There's options there. I'm constantly seeing you guys restructure debt. Rose actually did one about 12 months ago for someone that are with all the second tier lenders, and they had ugly finance attached to them when they came to us, and she was able to restructure that. And I remember at the time I was like, she just saved this person $50,000 a year in interest, right, across their portfolio, just from doing that one exercise. If you can't refinance at the moment, there's always some sort of option. What options are there for negotiating rates? What can people do?
So there's things called a pricing discount. Most lenders will have, but not all. And for some lenders, it differs. So you can get a pricing discount, and you can also, I guess, escalate it to get a better discount. So for example, when you're applying for a loan, let's go CBA or ANZ or the top four lenders, they have packages. So for example, CBA has the MAV package, and you can apply for a pricing discount there. The pricing discount can be for the life of the loan. So let's say you get a discount of 2.91, for example. That would be for the life of the loan. But let's go, say variable interest rates go down, that discount would still apply. So our BDM told us that recently. It was really interesting because we're thinking, you get a discount for 2.91 and then the rates are what, 3%, 4%?
You're paying 0.1.
That's crazy. Yeah, it's insane. But apparently things like that are around still. Discounts are really good. So at the moment, a lot of our clients, with some lenders, the rates have gone up to like 7, 8, and it is quite high for them, especially when they have a big portfolio of like 10 to 15 properties. We, on their behalf as their broker, can request a pricing discount from the lender. So we can go to things like Pepper, Liberty, see if we can get any, for example, and be like, oh, this client is a big investor, or they have these properties with you. Can you give us a discount? What can you offer? So we try to negotiate, see what they can give us.
Okay, cool, awesome. Well, there's something very important for everyone to keep in mind. I remember back in the day, like maybe it's been, when I say back in the day, because I haven't had loans from the Big Four for a long time, let's say 10 years ago. It's funny, like, I look at my properties and I'm like, these things are paying themselves down now. Like every time I log in, it's like, oh shit, there's more payments coming out, and it's like it's getting lower and lower and lower, and these mortgages are paying out. But my loans, I can't really go back because I've surpassed the bank's servicing and that. Those loans, like 5-10 years ago, they were fixed. They had the rate discount, but it was like only 0.7%, and I was able to get a good one, which was like 1.1% discount. So I think there's a lot of people out there that have got those discounts, but they haven't been geared up to the higher discounts, which may come in the form of refinancing and whatnot.
Definitely.
So important if you do have a loan that's beyond like 2 years old or whatever, to reach out to Jen and the team and see what we can do.
Some clients they have the rates, it's variable, right? So it's just gone up, especially with the cash rate going up with the RBA. This Tuesday it went up, right? 3.85. Things like that. So when we refinance with the client, they might have a really bad rate. They might have come out of a fixed rate, 1
Yeah.
point or 2%, 1%,
Yeah.
and then they jump to like 6, and then that's where we could refinance and probably take them to another lender and get them a pricing discount and get
Yeah.
a good rate for them, because it is a competitive market, you know.
Yeah.
So things like that help a lot. You go from 8% at least to 6 or 5.
Yeah. So there's still things people can do, even though, like, it would be stupid if someone went and fixed their loan now, because you fix it at the top of this, like, if you fix it at the top.
Yeah.
And when you fix it, here's something that I remember from years ago. When you fix a loan, when the loan comes off the fixed period, it deletes your discount
It
as
just
well.
jumps
Yeah.
straight away. Yeah.
But you lose your discount. That 2.9, you wouldn't get it. So people ask me, like, should I fix it or not? And it's like, well, they're things you need to consider. Like, yeah.
There's so many things with
Yeah.
fixed rate as well.
Yeah.
It's gone down a bit, but even if you fix it now, the rate's
Still
so
too high.
volatile. Yeah.
Yeah, it's too crazy. I guess, Jen, you've got these sort of like investors that have got 0 properties, and you get to 10 or 12 properties in their portfolio. You've got investors that have got 5 properties or 10, and then they're stuck, and their hands are tied, their feet are tied, their hands are tied to their feet, right? And they can't move too far from their position. They come to us and they're like, okay, I know that I've bought some negative geared properties and they're hurting me, or whatever the situation is, I can't move forward. How do I get from 10 to 20 properties? And that's what you specialise in, is being able to help people build those large portfolios. Maybe if you can give us an example or two of just scenarios where you've had someone that's stuck and you've been able to help them along the journey. Yeah.
So I guess one client that we had, he was stuck for a bit, so he did come to us, and he still wanted to continue his portfolio and expand, buy more investment properties.
Yeah.
One of the biggest factors was that he was self-employed.
Yep.
So with self-employed, there's a lot more to take into account, and with lenders, they want 1 year or 2 years financials.
Mm-hmm.
In this case, for this client, he didn't have his most recent financials ready.
Yeah.
So what we did was we did this thing called AltDoc.
Okay.
It's called alternative document.
Okay.
Instead of doing the typical 2 years financials or 1 year's financials,
Yeah.
we did BAS statements.
Okay.
So we isolated his income of the
Yeah.
2 BAS statements from
Yeah.
September and December,
Yeah.
and then we presented that to the lender. So
Yeah.
this specific lender
Yeah.
was able to accept that. It was Resimac.
Okay.
We presented that to them
Yeah.
alongside a few other documents,
Yeah.
but we didn't need to present the 2022 or 2021 financials,
Okay.
which was pretty good. So we were able to get this client to release about 600,000
Oh, yeah.
in equity.
Yeah.
It was really good. And then with that, he was able to purchase more properties, expand his portfolio. He bought 4 more properties.
Actually, no, there's this client situation. See, I guess with this client, like, we've basically doubled his portfolio within a month.
Yeah, it was really amazing. There
Yeah.
was a lot of workshopping to do to understand the deal, to work with our BDM,
Yeah.
to get it past the line.
Yeah.
But I was really happy to see him, expand his portfolio,
Yeah.
get more properties, because that's what we're
Yeah.
all about, helping our clients get past
Get
that
there.
line
Yeah.
and do those things for them.
There's so many people out there that's stuck, right? They say that the most wealthiest place in the world is the cemetery, because people die not achieving their dreams, right? They just don't execute them and stuff. And everybody's got goals, everybody's got visions. And, I think most people spend more time planning, their next weekend holiday, or what they're going to do for Christmas, what they're going to do and buy this weekend at the shops or whatever, but not taking the time to think about what they're going to do to live life on their terms, and and all those plans. And I think that strategy and questioning and workshopping, you've used that a few times, workshopping it with your colleagues, and that's what it takes to be able to get, like, it's not just these people wake up one morning, they've got 10 properties and they didn't know how they got there. Like, there's been lots of steps that they've had to take, and having the right people around to be able to help them make those steps to get there.
Yeah, it's a huge journey for the clients as well. I guess they have to really leave their comfort zone, take that risk, and know who they're dealing with, and hope their broker knows what they're doing.
Exactly. Well, if their broker doesn't know what they're doing, they're not going to have the money to do it. Exactly. And I think that there's some stats out there, like, in numbers, like, there's like 500,000 or 1 million people have like 1 investment property, and then like half of that has 2 investment properties. But when you get down to like 6 or more, there's less than 20,000 people in the country with 6 or more properties. Yeah,
it's crazy. A lot of our clients have a lot of properties.
Exactly. All the people that we're working with, or the people that are watching this, or listening to us wherever they are, they're in that top 0.01% of Australians that have 6 or more properties.
That's so good. Good on them.
Yeah, exactly. And you think like they talk about these like elite people out there that control things. So who are they, right? We're sort of like the investors that we're working with. They're in that top, the wealthiest Australians with their property investing journeys. And there's a big difference between 1 or 2 or 10 or 20 properties, and that's an extra zero. But it's how do you get there? And finance is the biggest key.
It is.
Yeah. Cool. And I guess just some little questions for you. What's one thing that you've learned about money since you've been working here at Zinger?
I've learned so much working in Zinger Finance, especially in this industry specifically.
Yeah.
I never thought about buying investment properties or expanding your portfolio or cash flow properties. Or, I think one of the things would be to, because I am a lot more younger, would be to start thinking now and start planning now while you can. There's never too old or too young to start in your investment journey, but if you can and you do have an idea, you should start. There's always that risk in being afraid, but you really don't know till you try. People have so much potential and they're not using it.
They don't realise it.
Like start now.
What's the youngest client that you've worked with that you know of?
Worked with? I think 19.
19,
yeah.
And I know there's 18-year-olds, so but there's lots of the team as well, so I don't know what you've worked with. So 19,
that age.
People think like, I'm too young to get into investing. Some people, I had someone the other day, and who were they? They're an existing client of ours. They wanted to move forward. They're like 54 or something like that. They go, I think it's too old to get investing. Like 54, you're still young, right? Like you still
are
push
still
it.
young, especially for investment. Like I had an interview with a client yesterday, and I was calling with him and his wife, and they were saying like, we want to get this loan, we want to start our property journey, but we don't know if we're too old. And I asked them their age, and they told me. I was like, no, you're never. You don't know until you try. They were in their 50s. And I was like, you really don't know till you try. We get clients now. I have one that's about to settle. She's about 54 as well, surprisingly. And she never thought she'd get a loan because she's had multiple mortgage brokers tell her that she wouldn't be able to get her properties out of a private lender or out of second tier. Now she's back with ANZ. It's really good.
That's how you ask for it, right? Most people think you go to the bank with a gun and a stocking on you. You're like, give me all your money, right? You ask nicely, they give you a pen, you sign it. They want to give you money. It's just how do you look attractive to the bank to get it? And it's interesting you said like the being young. Like when you think about it, if you're 18, right? Like people go, 18 to 25, go to uni and all these sorts of things, and YOLO, travel, Kentucky tours, whatever. But in that period of time, that's when you can really set yourself up, because I actually quit my job in 2009. I was 24 in 2009, and I had friends which were finishing university at the same time I retired from the workforce. And it's like, and I look back and I was like, I hustled. I worked 2 full-time jobs and all that sort of stuff. But I realised that like when you get to 30, like let's say someone at 30, they might be settling down, they might be having a spouse, they might be having a family, all those sort of things, and it's like it becomes harder, right? You've then got an extra dependent, you've got an extra 2 dependents, you've got an extra 3 dependents, and it's like, if you're young and you can stay at home, you can save, and you don't have all those expenses, you can really snowball the effect for when you're getting older.
It's really good to start young. Even just getting the foot in the door, I honestly recommend it to a lot of investors or just people that want to try. It's scary for sure, but you should definitely set yourself up. That's one thing. We have people that are older now coming with one property. But if they started a bit earlier, like they can still do well now, but the potential's there.
Exactly. And I think like if you're older, right, like there's so many people out there that have just bought a house to live in, right? Let's say that half the population's got a house that they own that they live in. Like it doesn't mean that you need to have, $500,000, $250,000, $100,000, $50,000. People that come to you have no money in their bank account. They might only have like $2,000, right? They're like, how can I get started with like $2,000? But then, you look at it and go, hang on a second, you bought a property 5 years ago for $400,000, now it's worth $800,000. That's where you live. We've got a bit of equity in there. We can tap into that equity and use that to buy assets, which are going to pay down your debt on your principal place and build your portfolio for retirement. So
yes, we do actually do that with some clients as well. It's really good.
What sort of percentage do you reckon come in with no money and they do something like that? If you had to guess, just roughly. I know it's on the spot, but if you had to guess.
About 60 60%.
60% of people come to us with no money.
Some clients, they don't come with money, but they have assets. And
Exactly.
They have like 3 to 4 properties, or they even have one, but they haven't touched it. They might have bought it a long time ago, like 2 years ago. But the fact that
2 years ain't a long time, folks.
No, it's not a long time, but 2 years to like 10 years.
Yeah.
Within that time, they've never really touched the properties that they bought, and they didn't realize, oh, there's equity, there's potential. I could have been at 4 properties, I could have been at 5.
Yeah.
But they never really thought of going to a broker or challenging it.
Yeah. And I think a good relationship with money, like ask you your thoughts on money, like having a good understanding of how money is created, how money comes into existence. Money is debt. You know, the world is run on debt. Everyone has debt. All big businesses have debt. The world's just a wash of Elon Musk. He doesn't have money. He gets loans against his shares, right? You want the assets. So I think it's a holistic approach that people need to have when they're building wealth. Cool. And I guess what would be one of your mottos? Apart from Zinger's best and Jen's best and call it a day, but I'll be one of
take a risk.
Take a risk? Okay.
Take risk. Don't know till you try.
Okay. And I think with taking risk, people go, risk can be risky and stuff, but I think if you minimise the risk, it's very important. Like, people think having money in the bank is safe, and in 2023 we've seen Credit Suisse go bankrupt. We've seen like 4 banks die already, right? There's another 20 waiting to fall off a cliff, right? People think the money's safe in the bank. The money's losing money from inflation and whatnot. Is understanding that risk and trying to minimise that risk as well, but take the risk. People are too fearful of taking risks and they do nothing, and
it's good to take risks, guys.
Cool. And I guess if there's one final piece of information that you could share with everyone that's watching or listening about how to build a large portfolio, what would be, apart from taking risks, what would be? So I guess if there's one takeaway piece of information that you could leave everyone with today on how to build a large portfolio, you've seen people building large portfolios and people with large portfolios. Most people come without a portfolio and we build it for them. What would be your takeaway piece for listeners and viewers today on how to build a large portfolio?
I guess know who you're dealing with in the industry and make sure you go to the right people. I guess for us as well, because we deal with investors, B.Invested is a good example because we have everyone in different departments, different companies to really hold your hand and take you through the process. And having that guidance is something that I would recommend you have. Don't know till you have someone to hold your hand through it all. True.
And I guess it is scary. Like, I talk about it like, buy 5 properties, buy 10 properties. So you're like, we'll do loans for everyone, 5, 10 properties, 20 properties, whatever. But it's not every day that someone goes out to buy a property, let alone 3 or 4 or 5. And there's lots of people out there that call themselves brokers. There's lots of people out there that call themselves real estate agents or buyer's agents or property managers or lawyers. But you want to know that your team has experience in being able to get you that result. If they don't have any clients that have got to 6 or more properties, well then you're going to be the first, right? It means they haven't done it beforehand. So you want to know that your team is experienced and got the runs on the board. So good advice. Cool, thanks Jen. And I appreciate you coming on today. And if someone wants to connect with you and be able to finance their dreams, how would someone be able to connect and get in touch?
They can click the link below.
There we go. Click on the link below. Hit us up at zingerfinance.com.au and reach out to the team. We're here to help you. There's Jen, there's the whole team, and you guys are doing awesome results for all our investors and our community. So thank you very much. Keep up the good work. Awesome. We'll catch up soon, guys. Thanks a lot for listening and tuning in today. You can always find us at Apple Play, Google Play, Spotify, and YouTube. Have an awesome week, and we'll catch up soon. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar about to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized, and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. And you're telling lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. say I'm really breathtaking. I can't help it if I really misbehaving.